Right, hello everyone and welcome to the video. Today I'm going to be going over OTE, optimal trade entry. But before I get into that, I just want to add another little bit to yesterday's video, which was liquidity. I didn't go over gaps like this. When the market opens with a gap, it is liquidity waiting to be closed. That is why most of the time price will come back to the gap to close it. Just like we have here on Euro USD, you can see price closed it, came down to the level, and then continued on in the true path. Let's go along and you can see that again. Here we have another gap, price moved away, so then price is then drawn back to that area to close liquidity. It came up to that, closed it, and then carried on in its true direction. So I just wanted to make sure you knew that. Now on to optimal trade entry. Right, we're going to stick with Euro USD. A optimal trade entry is when price is in a upwards trend or downwards trend, just like Euro USD is here, and you want to get in on the trade. You don't want to buy at a high price, because most of the time when you buy at a high price, the pair will then pull back and then continue on upwards, so you're likely to suffer a lot of drawdown. So optimal trade entry will give you that pullback position where you can get in on the trade. So we're going to start here. You can see we have a consolidation pattern which goes from there to there, just to outline things. Zoom out a bit. So there is the consolidation pattern, and then price continues going bullish. So we want to get in on this. So when we go down to the 1 hour chart and we concentrate here, we start to look for entries. So we see the break, and then we see, right, how can we get on this? We get our Fibonacci out. Here it is. And we place it from the last swing low. So that is a swing low. So it goes from there to the bottom, all the way to the last swing high, which is there. So that is swing low to swing high. If you're trading from the 5 minute all the way up to the 4 hours, you use the body of the candle. So you go from this body to that body. If you trade for the daily time frame and above, then you use the wicks. So we are on the 1 hour chart, so we use the bodies. So let's just match that up nicely. So there we are on the bodies, and we're waiting for the retracement into this area down here. The 61.8, I put OTE next to it so you know. So you have the first, second and third entry points. Most of the time you'll get the 70%, which is an ideal institutional buying zone, but sometimes it will literally tap the 61.8, or it'll come all the way down to the 79. On this occasion we came all the way down to the 79, and then we continued up. You would place your stop loss around the 100% mark, depending on the situation. Most of the time it will be around the 100% mark. Your first take profit will be up here at the 0.0, and then we have a further 3 levels to add. If I just show you them levels now. So we have the 0.0, the optimal trade entries, and then we have target 1, 2 and the swing target. So you can add them to your Fibonacci's. So the first place where you take your first partial take profit and move your entries to break even would be once price is above the 38, and your first take profit would be at the 0.0. So once price gets to here, then you move your stop losses from the 100 to break even, which is the entry point. So say you entered here, here or here, you would move it to there. So that is how you trade this optimal trade entry. You are best using it with other confirmations as well. So, like we had yesterday and the previous day, we would be looking for liquidity. We would be looking for an order block. I'm not going to label them up here, but you can see there is an order block here, bullish order block, using these two candles. And we have liquidity here that needs to be filled. And then you have an optimal trade entry, which is here, which is still within the order block. So that is 3 confirmations you can use. If you haven't watched the previous videos, go watch them. That will all make sense to you. So carrying on with the video, that would be our first optimal trade entry. Then if you missed that, we can look for another one. So we move the fib along. We are still in an uptrend. Price is still moving up. Then we have this big movement. So we have a swing low here to swing high. And let's see if this is an optimal trade entry. So just neaten that up a bit. So as you can see, we go from this body down here, which is swing low, to this swing high body up here. Move chart across. And that is our setup. Trading in this way will give you a good risk management with your trades. Because if you're entering here, your stop loss is around here, which is about 30% down. So it's about 30% from this 70. And all the way to the first take profit, which is 0, that is a 70% difference from here to here. So that just gives you that just about gives you a 1 to 2, just a little bit over risk to reward, because that is 30, and from there to there is 70, which you do 70 divided by 30, which is just over 2. So that's a risk to reward of 1 to 2. And then if you go for the further targets, then you add them on, depending on how you trade. This technique can be traded on all time frames. So if you are a scalper, then you will be doing it on the smaller time frames. A day trader will be doing on, say, the 1 hour chart. And then the bigger time frames, you obviously trade on the bigger time frames if you're more of a relaxed, don't like to be looking at charts person. So this would be your second entry. And obviously, as you can see, we've hit this first target. If you didn't get on that, then you just move it along and look for your second entry. Let's see if this matches up. So we went from that swing low to that swing high. No, we just about missed entry there. So let's carry on. So we're getting a bit tighter now. So we'll go from there to there. Very tight price action. But the concept still in play. So as you can see, we've got in on that optimal trade entry there. Let's just zoom in. So it turned around the optimal trade entry area. Some people call this the golden zone. I learned of ICT, so this is the optimal trade entry. So you would have started going in profit there, and then saw a big red candle knocking your stop loss out at 100%. Then things start to go bearish, and you think, hold on, it don't look like an uptrend anymore. But this is the 1 hour time frame. So when you go, let's just put a little indication where we are, indicated by the box, and go to the 4 hour time frame. You can see on the 4 hour time frame, we can check to see if there's any optimal trade entries. And most of the time, when you get a consolidation phase like this and a breakout, you will measure your optimal trade entry from the last swing low within that within that consolidation phase. So we would go from there. What I'm about to show you now, we'll learn more in future videos. So we're on the 4-hour chart, still using the bodies. There is your swing low, there is your swing high. We were traced all the way to that level. So we are hitting optimal trade entry if you are a 4-hour time frame trader. And then it continues on upwards. So we are then trading a optimal trade entry on the higher time frame than we was. Once you become quite skilled at this, you can trade bigger time frames and multiple time frames at the same time, but it's all depending on how you are as a person. Do you like to be sitting at the computer? Do you like to just enter the trade or set your buy limits or sell limits and then leave it alone? That's what this concept is based on. It is about setting your limits at a certain area or price and then setting your stop loss just like you would if you was about to trade it, and then leave your trade alone. Right, so then we are in the trade, and as you can see, if I move this along, this trade on the 4-hour would have hit target 1. So that would have been another successful trade, optimal trade entry. Let me just show you one last thing. So we are on the daily time frame. We've had this big upwards movement and we are upwards trending. Now we have bearish movement and we want to know what's happening. This in fact is another one I will show you in later videos, is a breaker block. This is just a bit of extra learning now. You kind of get the gist of what a optimal trade entry is. You get a optimal trade entry mostly in a one direction trend, or if price is pivoting. So if price is pivoting here, you might get a optimal trade entry to continue downwards. But back to what I was saying, this is a breaker block, which means it is the last bullish order block that was broken. So here is the bearish candle followed by this bullish movement giving you a bullish order block. And then we got a big bearish movement to break that. And now what you're likely to see, which you are seeing, is a retest of that breaker block before price continues downwards. So on this setup, live price is likely to continue downwards. So let's go down to the 1 hour chart and you can see how price react to that level. Here's the breaker block and price literally came up to it, retested it and continued down. That's just a little bonus bit, but I will cover the breaker block later on. And if you look to see where it's going, we have a nice bit of liquidity sitting here, so it's most likely aiming for that area. But going off track now, that is optimal trade entry and how you go about putting it into your own analysis and your trading day. Hope that helps a lot. Take care. Goodbye.